Hey everyone, welcome to Opening Doors, part 2 of Understanding the Loan Estimate. I'm Mortgage Pro John. As always, comment below with any questions you may have. Like, follow, share, and subscribe. So let's get back to this loan estimate. In part 1, we went over the first page of the loan estimate, which has all your personal information and all the details of the transaction, along with your loan amount, breakdown of your mortgage payment, shows you a quick glimpse of what your closing costs are and estimated cash to close. So as we get into page 2, closing cost details, we will go over all of those costs. Keep in mind, all the numbers on this loan estimate are fabricated for sole purposes of this video and educating. So section A, origination charges. These are all the costs associated with the origination of your loan. Keep in mind, the loan estimate is a universal document that all lenders must issue upon request. So when you are shopping for a mortgage, this is what you want to ask for. This is how you're going to be able to compare apples to apples and take those documents, put them side by side, and truly see the costs. So this is the section you want to go to when you are shopping. Section A, it'll give you all the origination costs associated. So in this one, you can see that this is where you will see if there's any points associated with your loan that you'll be paying, any processing fees, underwriting fees, application fees. For this example, the total cost of originating this loan comes to $2,440. As you move to section B, these are services you cannot shop for. So these are services where we use third-party vendors maybe, and we get invoiced, and those costs get transferred to you, the buyer. So for an appraisal fee, credit report, registration fee, verification of employment. Something to keep in mind is that when we do get the invoice, these will adjust to the actual cost. So you will get a closing disclosure at least 3 days prior to closing. That must be signed as well. And that is going to look just like this loan estimate, but with all the final figures in there, with exception to maybe some seller adjustments. But so that's where if your credit report fee only came to $35, that's where we'll adjust and say $35. If you didn't need a verification of employment or there was no cost for it, this cost would be wiped out. Moving on, services you can shop for. These are all the costs associated with the attorney, with your attorney. Some lenders have a preferred list that they want you to shop off of for an attorney. Some lenders do not require you to choose from a preferred list. So this way you can shop for any attorney. So these are some of the costs associated with your attorney that you can shop for and ask them where their costs are. So, how much do you charge for a title search fee? What is your flat fee for doing business? And so on. The next one, so as we get to section D, this is your total loan costs. So all the costs associated with your mortgage to originate this loan. A plus B plus C. So that's your 2015 plus 732 plus the 2,440 brings you back up to this $10,995 number. So that's the $5,187 of loan costs. The next number we're going to see is the $5,808 in other costs. So that's on the right side of your loan estimate. First, section E, taxes and other government fees. So those are like recording charges, such as your mortgage or your deed. Those are going to be actual costs passed on to you, the buyer, through the attorney, but from the municipality. So whether it's your city hall, the town hall, and then you're going to have section F, prepaid. So that's your homeowner's insurance up front, your full year premium, along with any prepaid interest. So prepaid interest is if you're closing in the middle of the month, say the 15th, that's interest that's going to be from the 15th of the month through the end of the month. Keep in mind, if you close in the middle of the month, like November 15th, we were using that date, your first payment's not going to be until January 1st. So when you make that payment January 1, that includes all the interest from December. That's why you have to pay the interest from November 15th through the end of the month. Moving on down, initial escrow payments at closing. So that's going to be your homeowner's insurance. Because that first payment isn't until a month and a half after you close, and you don't make a payment the very next month, a year from now, when your homeowner's insurance is due again in November, we're going to need a full 12 months in there. So we do add a buffer in there for your escrow. Same thing with your property taxes. If you close in November, your first payment's not until January. Well, in January, you're going to need 6 months of taxes due. So those will need to be paid, along with any prepaid taxes from the seller that you'll owe at closing. So 8 months is usually a spot on average for what we need to collect in regard to property taxes. And then any other costs associated with the loan, I put owner's title insurance in here. So when you add up H, G, F, and E, those all come to the $5,808. Add that together with the total loan cost of $5,187, and we get the total closing cost $10,995. And then we'll move into the calculating cash to close. You take your total closing cost plus your down payment minus any deposits that you made on your contract. In this case, I was using a $5,000 deposit. So that's going to be $30,995 minus the $5,000 deposit you already put down, and it brings you to the $25,995. I know there was a lot to cover there, and we did it rather quickly. As always, if you have any questions, just comment below, message me, like, follow, share, and subscribe. I'm Mortgage Pro John. This is Opening Doors, where buying a home is more than just a dream.